Hey everybody, this is John. Welcome to the free video. And a couple things we want to keep an eye on. One is just to keep an eye on Goldman Sachs. There's a saying, so goes Goldman Sachs, so goes the market. And you can see here we've been rallying. We're at 3 ATR away from the mean, very extended at this point. And so this really just comes to the question of, is the stock market itself going to collapse? And while of course we all know that the stock market is in a downtrend and is well off its highs, the idea that from right here, and I get that all the news is bad, right? It's been bad for a while, just as it was good here. Do we just absolutely die here, or are we in a spot where things are going to kind of go sideways? So I'm looking at something where we have stocks like Amazon, right? Amazon's dying on a vine. It's just a death spiral. But then you have Goldman Sachs, you have Amgen, you have Occidental Petroleum. They're at new highs. So, and remember, as biotech goes up, as financials go up, and as energy goes up, and then as techs fall, the percent that they make up of these various index also changes. So, after the 2000 crash, at some point, energy and financials became way bigger sectors than tech, and so they then also impacted the S&Ps more. So just the idea here that's like, oh my God, tech's a wreck. Well, it's been a wreck. It's been a wreck for a while. And so if we look here at Amazon, Amazon, there's a lot of support at zero. So at some point, it'll stop, right? But all these gains essentially from kind of this nice COVID lift, right? They're gone. And remember the move here from about 200 to 100. Let's call it $100. So am I thinking correctly that would be 2,000 points pre-split? So we split 20 for 1. I might have that math wrong, but I think that's right. I think that we were close to almost 4,000 here, and so this would be more like 2,000. So just a lot of these stocks that benefited from lockdown kind of coming home to roost here. And this one, Facebook, this is pretty bad, and we're down here at 102. And what's it going to take for it to kind of work its way back? This is a stock that could see $50 easily. What about some of the more speculative stuff like Ethereum? Ethereum here is holding up okay, but again, just remember the most important thing here, and I think the best chart you can see with this is what does quantitative easing versus quantitative tightening mean? And this is the Cathie Woods Fund. Quantitative easing rewards speculative assets. Okay. Quantitative easing punishes speculative assets. So you just got to think of it like that. This is why an energy fund. Again, let's just look at Occidental Petroleum. Okay. So what did Occidental Petroleum do during this time? Well, for a while it was just kind of flat and boring and nobody really cared. And then, boom. So that's what we have and we just got to keep in mind, remember where we are. And the way to kind of remember where we are is to look at things like the US dollar. Okay, if the US dollar is high, that means that we're still in a quantitative environment. In fact, I would argue that we're in a quantitative tightening environment until this goes below $1, which that could be a long time. And then TNX, that's the 10-year note interest rates. Wasn't that long ago when we were at 0.5%? Okay, this was 0.5% over here. So we're at 4.2%. So that's 8x. Financial. In some spaces of financing, you get an 8x increase. Now, obviously, there was a spread there, so mortgage rates went from 2.5% to now 7%. So that's not 8x, but it's still something that works its way throughout the system. So as long as TNX is going higher, then think of it as we're in a quantitative tightening environment, and it took a long time and many trillions and trillions of dollars for us to get to the point where we could see inflation. And then guess what? It takes a long time for it to work its way out. So it's not going to be. I think the argument that inflation has peaked is there, but it's not going to go away. I mean, I think that could take years. And so how does the interest rate reflect that? Anyway, not a dull moment. Remember, tomorrow, Wednesday, we have the Fed meeting notes. They come out around 1 o'clock Central. And just the big idea there is there going to be anything different? Any language differentials? and then we'll go from there. Bigger picture in the stock market, we are extended. I wouldn't be surprised to at least see a decent sell-off, but I'm not looking for a rollover and die. All right, you guys have a good one. We'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.